Hi guys, this is Steve O'Hare, and today I'm introducing a trading education slide on trend lines. I've been in the market over 30 years as a trader and a chartist, and I'm going to share with you my knowledge and everything you need to know about trend lines. So we're going to start. The presentation is going to take place over a number of slides. We're going to talk about drawing a trend line first. And then we'll move on to what a trend line actually is and when it's validated. So basically a tentative trend line, which is 2 points, and a valid trend line, which is 3 points. I'm going to talk about using trend lines for trading and how significant each trend line can be. And then we're talking about when trend lines are penetrated, what the outcome is, and also role reversals of trend lines. So let's move on to just show you a chart here. This is a NASDAQ chart. This is a monthly chart. And we can see this trend line goes back into 2009. So when we talk about drawing trend lines, you're basically a tentative trend line would be joining 2 points. But this is just an image of what a trend line would look like. And we can see the start of the new trend upwards started here, that we had a dip here, and we had this point touched 2 or 3 times, and a 4th time here. It basically prices stalled in front of the trend line and then reacted higher again. But we class this as an upward trend line. It tells us which way the trend is moving. We can see prices moving higher, so we know the trend is higher. But also, because this is such a long-term trend line, we expect this to have some significance if the price ever retraced to the trend line. So we can have upward trends, and we can also have downward trends. This is a smaller time frame. This is a daily chart in the S&Ps. This is a recent chart, actually, just the last couple of days. And we can see here the move lower, the new trend lower, and we can have already we had 3 highs on the candles, and we had a 4th touch here. So the trend line was established here. This made it, this confirmed the trend line after it's been established as well. So this gives us a good idea of how we can stay with the trend. If we're short, this will give us a guide of maybe when we have got to cut those short positions, or if we want to add to those short positions. So it can be a great tool to use in any chart. So initially, I'll talk about the tentative trend line. So we see the price action moves lower, forms a swing low. We have a rally from here, and then a pullback. Now, once we get a reaction from here, we can then draw a tentative trend line. But to confirm it, we're waiting for the 3rd touch. As I've said before, the number 3 appears all over the place in technical analysis, and we use it for a whole host of different reasons. So how do we know when the trend line is validated? Well, we need that 3rd touch. And in this section, you can obviously see we're waiting for this 3rd touch. So this is what a good trend line would form like. And we have these peaks and troughs as the market moves higher. We get the 3rd touch, so that's validated the trend line. And now we'll see buyers coming in once that trend line is approached again. And we can see 4 or 5 times this can work, and it's a good trading strategy to work on. Just overall gives us an idea of which way the market is trending, whether it's upwards, downwards, or even sideways. So how do we use trend lines? I mean, we can talk about trend lines which are moving higher and lower, but also sideways trend lines. We can use this from a slide yesterday, and we can see this horizontal trend line or horizontal support line. And this could be in a sideways trend, and we can use it to once again, this is a tentative one. We could really do with that third touch to tell us we're in a channel of some sort, sideways channel. Yeah, I mean, it's just a case of taking these points and continually drawing lines and redrawing lines if you need to. If I just move to let me just bring up a live chart to give you more of an indication of what we could be looking at So this is a 60-minute chart, so it's a smaller time frame really, more for the intraday trader. And this is a trend line that has been drawn since this sell-off started, and we've got 2 points where it has touched here. That's validated the trend line. And as prices moved towards the trend line previously, we got another swing lower. And again, we've had a penetration here. So that's something that we have to think about, you know, what a penetration is and how important it could be. So let's again, this shows you an upward trending line, upward support, and we take the trend line from the peaks and troughs. There are other ways that some analysts look at these. They maybe look at take the daily close because they see that as one of the most significant prices of the day where the market is settled. But it's really the great thing about trend lines, you can sort of like make it work for you. And you know, taking all the prices into consideration, sometimes you'll get a big spike higher on a low volatility move, on a sort of high volatility, low volume move. And so that spike in price may be really something that you may want to ignore or not consider for the purpose of establishing what you're trying to do is establish the longer term trend over whatever time frame you look at. So what is the most significant things in a trend line? Really, we've got the time that the trend line's been going. So the longer the trend line has been established, the more significant that will be. Now, a longer term trend line that maybe has been going on for months or years may not be really significant for a short term trader. But the short term trader, if he does know about these long term trend lines, may be able to skew his intraday trading or his daily trading and take the longer term trend line into consideration, because there will be bigger market participants, funds, banks that are looking at these longer term trend lines. Also, the other point to think about when it comes to trend lines is how many touches the trend line has had. So as we've said, a tentative trend line is 2 touches, an established trend line is 3. If we get 4, 5, 6, 7 touches, it becomes more and more significant. So it's always good to have a look at charts, even if you're an intraday trader or short-term trader. Have an idea of where the longer-term trend lines are, and that could, you know, sort of like impact on your trading day. You may not realize why the market's not going down when it should do. Maybe there's longer term traders in there buying at the major trend line. So the significance is the time that it's been established and how many touches the trend line's had. So when we come to talk about trend lines, we also see that sometimes trend lines are penetrated and they could be false breakouts. And this can happen on a number of occasions. And so how do we trade that? How do we consider that? Well, I suppose it all comes down to by how much it's basically penetrated that trend line. That could be one thing you look at. You could take to confirm a break of the trend line. You may say, right, I need on a smaller, shorter term time frame, maybe I'll need a 1% break of that trend line to confirm it has broken. So with these quick price moves that we get from day to day, that may invalidate the trend line, but if it spikes back very quickly, then you could almost say the trend line has actually worked, although visually it doesn't look like it's worked. So a lot of traders look at the percentage it breaks by. Others look at the time filter on it. So they may say, I will only take that as a break of a trend line if it has closed below that trend line, an upward trending line, if it has closed below that trend line for 2 days. It's a 2-day rule. This can be also transferred into shorter term time frames. So if you're looking at an hourly chart, if it's broke that trend line for 2 hours, on a monthly chart, 2 months, and so on. So you know, it's things like that to take into account. There's even one that's quite well known. A lot of traders don't like to have positions over the weekend, so they would need a Friday close below the trend line. and that's probably more for swing traders or longer term traders. A short-term trader would be looking at the micro price, whereas longer term traders look to be establishing holding positions for the longer term. So again, maybe I can show you the chart. If we bring it out, this a great example maybe would be this monthly chart. This is the, no, where have I gone with that? This is the monthly chart on the DAX, and we can see we had the 2008 banking crisis, and the upward trend started in March 2009. We had a pullback, so it's a tentative trend line, although again, you can be quite artistic with these. You can actually take that third dip lower, as prices did close around this level, they came back and retested. So take that as a confirmed trend line, and we're looking for, obviously prices accelerated at a steeper rate than the ideal 45% angle. So obviously in a bullish trend, you know, even from points here, you can actually draw new trend lines. So take this as a low. And then you can get 1, 2, 3, 4 points, 5 points, a break here, 6 points. And then obviously the trend line's invalidated there. So if we look at this trend line here, we got the monthly chart, price action is trading at 97.75, currently below the trend line. So this could be taken as a the longer term trend is actually moving into probably sideways trend, potentially a downward trend. So that's looking at the monthly chart, but again, let's look at the hourly chart for the more intraday trader out there. And we can draw, this is what, you know, you can spend lots of time drawing trend lines. We can see this hourly chart, the downward trend line. We've broken, closed above it. So that's one, and it didn't close above it for the second time filter. So if you're looking at the 2-day rule, this trend line remains intact. And again, we've poked above it on the 27th, and it's reversed lower. At the same time, you're getting this shorter term time frame, you're getting this upward trending support coming in here. 1, 2, 3, 4 times. It broke below it, negated it, but didn't close below it. So take that as the trend is still in place. And now we're looking to test it again. So all these things to bear in mind. You can't have enough trend lines on your chart, as far as I'm concerned. It can, I mean, you know, you'll always find a reason for something to stall and reverse at different prices, but you know, depending on what style of trading you take, this is what you've got to be looking at. Looking at the horizontal lines of support and resistance and trend lines, and it will give you a decent indication of where we are. So let's talk about trend lines in terms of role reversals. So if we have an upward trending market move, we get the break of the trend line for either a certain percentage, over a couple of days, over a Friday, whatever you want to choose. And this is the start of a change of trend. Could be a sideways trend, could be a downward trend, we don't know yet. And the breakthrough, the trend line itself then becomes resistance. Like we talked about support and resistance in the last slides we did, the trend line support can become resistance. So again, we have the rally up. Funny enough, you'll have horizontal resistance here from the previous shoulder. You've almost got a head and shoulders formation or a triple top type formation forming. So connecting the trend lines and being aware of the trend lines after they've been broken can work really well. There's plenty of principles around other trend lines, like the fan principle, Gann charts. They all look at extensions of whatever trend is going on. So yeah, I hope you found that informative. Gives you a better understanding of trend lines. Again, what could do is just quickly show you a live version of drawing trend lines on maybe a clean chart. So if we take the FTSE, for instance, and we want to look at a daily chart, hopefully I've got no trend lines on here. Let's remove all the stuff, remove drawings. Let's take it out to a weekly. Here we go. Trend line. These are trend lines that you could have had drawn for ages and ages. Look at that one. That's just a, I haven't planned this, that just happened. So we got the start of the trend here. The second trend line makes it tentative, confirmed by the third and fourth. A break here, obviously, but it didn't close below it. And then we got this great one here, the fifth. You buy off that. It's a stronger trend line over a longer period of time. You buy off that, and you've captured great return on that. Now we come to the break, broken the trend line, closed way below it, even spiked below this horizontal support, which would have been here. Didn't close below it, so there's still a little bit of nervousness if you want to, if you're a bear trying to get short. The spike higher, then touched that trend line and rejected it. So that's a great example of how you can, you know, use trend lines. Let's take it back a bit further. A very gentle upward sloping trend line. As I say, look at 45 degrees as the like a market in equilibrium, moving higher or lower. That's a lot less than 45 degrees, and this is steeper than 45 degrees, but around 45 degrees. So that's the better one to be looking at. But obviously, think about the longer term time, and we go back here. So let's look at 1987. Here, could we take this as a trend line from 1987? Probably not, because if we look at the, that was a proper break of the trend line there. Closed below it, closed below it, closed below it, closed below it. So can't really take that as a trend line. So let's zoom it back in. And let's take the tentative trend line. There you go. Now, big test when we get down to 4,500. Let's see. Thanks for joining me today. It's been, any questions on that, Joe?
No, all good, very clear. Nicely done, Steve.
Excellent. All right. Any questions, ping them to me. Here's my email, here's my Skype. More than welcome to take any questions and give you some time on this education. Thanks very much, and see you again next week.